What's good, my peoples? Today we will be going over a lifestyle plan. We'll be going over a finance lifestyle plan. And the category will be life insurance. So we'll be actually going over life insurance. And like I always tell you, if you want to follow along, then you can always break out your finance lifestyle plan and follow along with me. Or if you don't have one, then you can go to lsfit.com, go to products, and you can get a finance lifestyle plan. Once you get it, it'll download. You can put it on your cloud. You can store it to any of your media devices. I strongly recommend going to get one. So, let's jump right into life insurance. So, insurance for a life policy is a contract between an insurer and a policy holder. So the insurer will actually be the company that you get the policy from, and then you would be that actual policy holder of that actual contract. So the most common insurance policies is a term life, whole life, and universal life. Those are pretty much the main life insurance policies that most likely that you will be getting. Obviously, there's other ones that you can get, but those pretty much the main ones. So how life insurance policy works is you will be the policy holder, and then you will have a beneficiary. So whichever person you decide to sign on there, say if you passed away, then the money will go to them. So you can split it up. You can have more than one beneficiary. You can have as many as you want. If you want 10 beneficiaries, then you can have 10 beneficiaries. And then you can put, if you want primary or like secondary, as far as, how the money is distributed and things like that. So say if you got your primary beneficiary and something happens to you, then the money will go to them. Say if you and the primary beneficiary was together and you both pass away at the same time, then it'll go to like your secondary that's actually on there. And then you can break it up in percentages as well. So if you have like 4 people on there and you want them all to get 25%, or if you wanted somebody to get 30, somebody to get 20, another person get 30, another person get 20, you can kind of split it up however you want to. So that's how the actually beneficiaries work on the actual policy. Now, when you get into policy too, you want to make sure. A lot of people be like, well, I ain't got nothing, or I have nothing to leave and they don't need no money. You have to think about the cost that comes with you passing away. So, you might have the funeral costs, which typically people kind of associate with the life insurance, getting buried and different things like that. But you got to think about taking time off work. What if your loved ones had to take time off work? Who paying for that? Maybe they don't get PTO at work, so they actually are not getting paid. Food, if they have people come over to celebrate and different things like that, who's paying for that food? And then your income. So what about replacing your income? So if you pass away and you was the breadwinner, now what is your wife going to do now? They sit there stuck with all the bills. What are they going to do? Or even if both of y'all worked and y'all was going 50-50, or even if you was just chipping in 25% and they was doing 75%, it would not matter. So say if your wife was a breadwinner, she did 75%, you got 25%, she still need that 25% to pay those bills. You do not want to add stress on top of the stress that your loved ones already have. So it's very important to make sure that you going over everything to see exactly what you need, so you can make sure you set that person up for success when you do pass away. Because you don't want to leave them with a whole bunch of bills and just bad times. Like I said, they already got a lot of stress already from you passing away, so you don't want to add more on top of that. And then, so how the policies actually work is they kind of based off like age, health. Those are pretty much the 2 main things that they're kind of based off of. So they take your age, whatever age you are. Obviously, the younger is the better, because obviously you'll get cheaper policies when you're actually younger. But as you get older, then obviously the price goes up. Same thing with health. The more health issues you have, the higher the premium will be. The less health issues you have, typically the less the policy would be. And then how it works as far as payments is, it's a premium. So say if your policy, say if you got a $100,000 policy and it costs you $1,200 a year, that means you pay $100 a month for premium. So that's all the premium is. When you hear that with life insurance, it's just how much you actually pay. And there's different ways that you can pay. Some carriers or insurers allow you to pay monthly, quarterly, yearly. You can do paid up. There's a lot of different ways that you can actually pay that premium. So obviously you will need to speak with whoever's insuring you and whoever that agent is, and they will be able to assist you. And there's pretty much two different types of agents. You have more captive agents and independent agents. So the captive agents pretty much works for one company. So say if you have like a Transamerica policy or something like that, they might have the agent that you actually only work for Transamerica. So they only sell Transamerica products. And then you have more of an independent agent like me. I'm licensed through like, I believe it's like 15 different carriers. So I'm more independent. So I can give clients more of a variety of different carriers. So obviously you might have different health issues that maybe some carriers won't even allow you to have a policy. And then you have other ones that really don't care about that health issue. So, I mean, it's up to you whichever way you want to go. But typically, obviously, an independent agent, you have more options than just a captive agent, which is just with one carrier. So pretty much that's life insurance. It's not nothing complicated about it. It's just understanding it. And once you understand it, then you can figure out what is best for you and your family. So I would recommend everybody to look in life insurance, because you do not want to leave your loved ones with that burden of having to take care of everything. So if you do want tips, or if you want a life insurance policy, or if you just want a finance lifestyle plan, then check me out, lsfit.com.